Hello, traders. It's Monday evening, Juneteenth, June 20th. I hope you're all enjoying the holiday. Let's get right to it. I like to start all my videos off with the previous pick. That way you can get a feel for the performance and the system that we trade. MPC, huge winner. Before the open on Thursday, this video was released. You can see how the stock opened around $97. Look at that sell-off Thursday. Now, in all fairness, I am only day trading. But if you came in Friday morning, you saw that the market was down. You've got this long red candle through the prior day's low on heavy volume. You know you're going to get some follow through. So, yes, it was a great day trade for Thursday. Still a lot of meat on that bone on Friday. Plus, look what happened Friday. You had a market rally during the course of the day, and the stock was not able to get off the deck. So, no real reason to be shaken out. There's your rally, S&P 500 on Friday. Look at the stock, can barely get off the deck. That tells you that there's still some selling pressure, but you should have taken profits because we are only day trading. This market is very, very volatile. It's not appropriate for swing trading. I'm going to get into the market dynamics right now, but you can see once you get that market release, you should be taking gains on a stock like that. Call it a day, take your profits on MPC, wait to reload. So let's go in and take a look at the market. Then we're going to find another stock that might work well for tomorrow, Tuesday. As I mentioned in my last video, you can see how the market has been dropping, compresses in a range, then you get your next leg lower, compresses within a range, get your next leg lower, compresses within a range. We did get a little pop right in here, but this is the transition down to the next support level. So you can see there's horizontal support here. I'd mentioned in my last video, please confirm this, that the market would have another leg lower after the FOMC. I thought 375 might be an area where we consolidate. We've gone a little bit lower than that. I'm expecting a bounce in here, and then we're going to trade within this range right here. And then we'll see what happens. The next FOMC meeting is at the end of July. We'll also start ramping up for some earnings. That starts June 14th, I believe, with JP Morgan Chase. So if there's going to be any kind of little bounce, it's probably going to happen within the next 2 or 3 weeks. There's typically a little bit of excitement that builds going into earnings season. This time around, earnings guidance could be very soft. We're seeing a lot of lowered projections right now from analysts. We've even seen it from the Fed. They've reduced their GDP forecast for 2022 down by a full percentage point. I believe 1.9% is what they're looking for this year. That's not a particularly good sign. In fact, when we had the last FOMC statement, they said that they still plan on raising at least 50 basis points in July, maybe 75 basis points, which is in the higher end of expectations. ECB also tightening. The issue that we have is that they were leaning on strong employment numbers. So, very important to watch initial jobless claims week in and week out right now. Those are current numbers. If you start seeing them tick higher, it won't bode well for the unemployment report, and that also will create some selling pressure because analysts, asset managers, they're all going to be sitting back watching. They want to see if the Fed's tightening is going to reduce economic growth. So until the Fed is done tightening, they're just going to sit back and watch. It may take 3 or 4 months for them to get the warm fuzzy that they need to see that economic growth is still intact. It may not be. We really don't know what to expect at this stage. The one thing that we do know is that the downward momentum has been established. You can see a little bounce here and then continuation. The market does not go straight up and it does not go straight down. It has pauses and bounces along the way. So on a sell-off like this, you start to see support forming, tails under body, take your gains. Get a nice little bounce, upward sloping trend line, long red candle through horizontal support, through this upward sloping trend line. Aha! We're getting ready for the next leg lower. If you watch my last 3 or 4 videos, you'll know that we've been getting short in here. We have taken advantage of that move. Now we've got these big, long red candles on heavy volume. We can expect a bounce in here somewhere. So this is a very important concept. Pete, are you bullish? Absolutely, positively not. And I've already told you why. I believe that the Fed is going to continue to hike rates at an aggressive pace, and we could start to see economic deterioration, and we could get lowered corporate guidance once earnings season comes around. All I'm looking for is a little bit of a reprieve, a little bit of a bounce. Got a couple of tails under body. We did have the futures up about 30 points in a holiday abbreviated session today. So there's a little bit of upward movement. Usually after these FOMC statements, there's a little bit of a relief bounce in there. That's all I'm looking for. Right now, it would be very, very difficult for me to tell you to short once that train has left the station. So we did identify some really nice weakness in the energy sector. We took advantage of it. Take your gains. I want to see if the market can bounce in here. If it does, again, key statement, for day trading purposes, I have a stock that I found that I think will set up nicely. So what I'd like to see is I'd like to see the market starting to gain some traction. At very minimum, I would like to see it above this 370 level. So that was the open from 2 days ago. I'd like to see us eclipse that, and I'd like to see the market continuing to move higher. So the first caveat to the trade is that the S&P 500 has got to be above 370. If it's above 370, I think there's going to be a little bit of a bounce, and we'll have an opportunity to buy some stocks that have relative strength. How would I find these stocks? Well, I'm going to use a custom search, and I'm just going to be looking for stocks that have relative strength. They're strong relative to the S&P 500 on a 5-minute, 15-minute, 30-minute, just across the board, even on a D1 basis. I'd also like to see a stock that was above the prior day high. So on Friday, market really didn't do much. It stayed within the first hour range, was not able to get above the prior day's high. So a stock that was able to get above its prior day high and has good relative strength would be of interest to me. I also want to make sure that it's got some pretty decent option liquidity. I'm going to click through a couple of these just to show you a stock that I would not be interested in and why, because I think those are also valuable lessons. So I'm going to move this off screen. We're going to go into a 5-minute chart, and we're going to change that to a daily. I have to really, really like a stock on a daily basis right now if I'm going to day trade it from the long side. Why? Because if the stock isn't strong on a daily basis and I'm swing trading it from the long side, I know that I'm counter trend trading. I'm going against the longer term market trend, so this stock better be super, super strong. I would also plan on trading smaller size on the long side than I would on the short side because I'm trading against the trend. I'm simply looking for a little market bounce in here that I can take advantage of. So I'm not bullish. It's very important for you to know that. So let's take a look at some of the stocks that were on the list. AAL is first up. Nice little bullish engulf here. There's a horizontal support level. I'm not overly interested in this because it doesn't have great relative strength. What I'm going to be looking for is I want to see a stock that's actually moving higher when the market has been moving lower. Not interested. It's got a higher low, but it's still been drifting lower. Not overly interested. AMC, it's got a little bit of a base forming there. AMZN, Amazon, 1, 2, 3, 4 touches. Starting to form a little bit of support here post split, so that's good. I'm just clicking through to find something that looks pretty decent. And finally, I'm going to come across. This is not bad, CLVS, but it's a $1.20 stock, so I'm not going to be trading that. It's got some volume through some horizontal resistance, long green candle, so that's nice. Finally, I'm going to come across CRWD. Quite a few things that I like about this, so let me go through all the technicals and why I like it. First of all, you're going to notice that we've got this nice upward sloping trend line. So when I see something like that, I want to make sure that I'm dropping my trend lines here. I can also see that the stock recently broke a downward sloping trend line, a very steep one. So I'm not as interested in that because these very, very steep trend lines, they're easily breached. But it was able to get above that level and it was able to hold that support. Here is a horizontal resistance level, now support, that's been able to hold. I like that. I also like the fact that the stock has got a nice horizontal support level right in here. You can see 10 SI greater than 0. That means that the stock has been strong relative to the market. Here's another way to look at that same information. I put up SPY. This is what the S&P 500 has done. Boom, 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 boom. Absolutely relentless selling. Guess which sector got hit the hardest? Tech. This is a tech stock. When a tech stock is holding up well relative to the market and relative to its sector, it tells me that institutions are out there buying. So we can take a look at CRWD and we can overlay the QQQ to see how it's performed relative to QQQ. And the gray line in this instance will be QQQ. Here you go. Tech stocks getting pounded. Tech stocks making a new relative low. That was the previous low in QQQ. Boom, we took that right out with ease. But look at this stock. It's actually making higher lows. I like CRWD. So let's put the major moving averages up. We can take off that overlay as well. So let me remove that very quickly so that we can remove as many things on the chart and really clear it up. I'm going to put up the major moving averages so we can see if they come into play and where they might come into play. And you can see that we're well below all the major moving averages, but the stock has a chance to possibly run up to that 50-day moving average before it runs out of steam. So what I would like to see in CRWD is I'd like this downward sloping trend line right through here to be breached. And from my viewpoint, it's going to be this high right here, which is approximately 167.50 that needs to be breached to the upside. If that happens, then that downward sloping trend line will be breached. Click GTC, click on that candle, click on that candle. There's your downward sloping trend line, and you can see it comes into play right around that 167.50 level. So in order for us to get long on this stock, let's say that the S&P 500 gaps up tomorrow morning, right out of the gate. We come back Tuesday after a holiday, S&P futures up 30 points. We already had some nice price action today. Am I going to come in and chase CRWD? Heck no! Most of those opening gaps higher have been faded because there's been such intense selling pressure in the market that every single one of these gaps up have been pounded down because there's so much selling pressure. How do you know, Pete? How do I know? That's what the candles are telling me. Do you know how you get a long red candle? It's the stock or the S&P 500 opens near its high of the day, closes near its low of the day. That's what a red candle is. If I take a look at a 15-minute chart, I can go back and see, hey, there's a gap up. Look, was that the high or the low of the day? No, the market pulled back. I had plenty of opportunities to buy. So on any of these gaps up, we had a gap up Friday. Look, market pulled back. We have plenty of opportunities to get long because the market is in a steep downtrend. So just because we get a gap up Tuesday morning, you do not come in and buy CRWD. You want to let the first half hour, first 45 minutes play out. And what you'll be looking for on a legitimate bounce is for the market to be able to open up. So it opens higher, and then you start seeing some stacked long green candles telling you that the stock is continuing to move higher. So if you don't see that pattern and you don't see the volume coming in, then you should do nothing. You should continue to wait. Through the course of the day, you want to make sure that when the selling pressure does finally show up, that the S&P 500 is able to hold those gains. And remember, our level is going to be right in here. So 368 on the S&P 500, we've got to be above that. In fact, I think I said 370. So S&P 500 above 370, market opens higher, we start seeing some stacked green candles, market's able to hold the bid for at least an hour or two. That tells us that, hey, you know what, we could be getting this bounce. May not happen Tuesday, it might be Wednesday when we finally get the bounce. When we do get that bounce, and when we do finally start to see the market gain a little traction, looks like we're going to start moving higher, then we'll know that CRWD is the stock that we want to follow. That's the one that we want to buy. We bring up the chart, we put up the S&P 500 overlay, and here's the pattern that we want to see on a 5-minute basis. You can see that it was able to open higher on Friday, and as the market pulled back, it was still above the prior day's high. That's a great sign. Sorry, I'm just flipping through the other charts to take some of the other indicators off the chart. So here's another tell. So you get this market pullback right here, the gray line. Look at the stock compress. As soon as the market starts to go higher, whoosh, it runs higher. Even late in the day, look at that market pullback. It's still holding up well. Market pullback, it's still near its high of the day. Those are the types of things that you're going to want to see so that when we get that bullish market day, you want to see that type of relative strength in CRWD. If you've got it, it's going to be a very nice day trade, not swing trade. We're not swing trading. This is sticking your head in the noose. When you've got a market pullback like this and you're trying to pick a bottom, you are asking for trouble. All I believe we're going to see is a little reprieve, and that's why you have to measure twice, cut once when you're trading from the long side. We're just trading a bounce. Your entry point has to be near perfect, because if you start losing money on that trade, you do not have the latitude to hold on to it overnight because of the selling pressure. So make sure that your entry is good. Make sure you're using stops. If you're on the wrong side of the trade and your entry is poor, take your loss. Look for a possible entry point, but keep it very, very light if you're playing bounces. When we do have the bounce, I assure you, I'm going to be coming in and I'm going to be having another short pick for you. But that may take a week, could take a little bit longer until we see a relief bounce that finally stalls out, starts to roll over. And when we get that, a lot of these super weak stocks will have bounced and we'll have an opportunity to reshort them. So your mentality right now should always be look for an opportunity to short, wait for that big drop, take your profits, wait for that bounce to stall out, breaking support in here, look to reshort. Now we're starting to see some support, wait for that relief bounce, look for your stocks to short. That is the mentality that you should be in right now, because this market does have more downside, and there's a good chance that as we start getting those economic data points over the course of the next 2 or 3 weeks, with another Fed statement coming toward the end of July, another rate hike, that we're going to see another leg lower. That's all I've got for you right now. Please post your comments. We'll talk to you soon. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.